Welcome to Target Market Insights, the Multifamily and Marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights, the Multifamily and Marketing podcast. I'm your man, John Kasman, and I want to thank you for joining us for another great episode. Now, if you're enjoying this show, do me a favor and leave us a 5-star rating and review. And don't forget to hit the subscribe button so you don't miss an episode. Now, today we're going to be talking to Tyler Chesser. Tyler Chesser is a CCIM, an entrepreneur focused on multifamily real estate investing. He also is a business coach for real estate investors and real estate brokerage investment sales. Now, as an active and passive investor, he has experienced the successes and failures of building and operating a real estate portfolio. Tyler is the co-founder of CF Capital LLC, a real estate syndication firm, and he's the host of a popular top 200 global business podcast called Elevate, where he sits down with top real estate entrepreneurs and other recognized performers in their respective fields. Let's welcome to the show, Tyler Chesser.
John, it's a pleasure to be here with you, my friend. Thanks for having me.
Tyler, good talking to you. Thank you for coming on the show. I went through your bio, but why don't you take 1 minute and describe yourself in your own words?
Yeah, no, that's great. I appreciate that. I don't know. I mean, I guess the way that I would describe myself is just somebody who's addicted to personal growth. I love the process of, getting to the other side of discomfort. That's just something that I've totally become obsessed with over the past few years. And the reason why that has been is because I transformed from similar to you, I have a marketing background and I was in the corporate world and that's what I was doing. I was doing international marketing. And I learned, quickly through that process, it took me a few years, but I learned that wasn't necessarily the path that I wanted to go on. And so I transitioned into real estate as a broker, to start with, and started learning about investment real estate that way. But it was very hard for me in the beginning because I didn't have an entrepreneurial background. It was very challenging, but learning how to build a business as an entrepreneur, through that, I just started to read every single book I could, listen to podcasts, go to conferences, seminars, meet people like yourself, and try to learn as much as I could. And so that's just really become my identity as somebody who's obsessed with growth and sharing that with other people as well, because that's been the key for me to build a business in real estate, whether it's my own portfolio, whether it's, helping others achieve what they can achieve through real estate as well. But that's kind of just I would say that's my 1 minute pitch of who I am.
I love it, man. You said you were addicted to growth. And as someone who made that transition from corporate life, corporate America to the investor side, kind of starting as that broker, you mentioned that it was tough starting out because you didn't really have that entrepreneurial background. For someone listening right now who is in corporate America, is starting to invest in real estate or wants to get started investing in real estate, if you could go back to talk to that Tyler back then in that time frame, what would you say are some key things that would make that transition a little bit easier?
I mean, I think the biggest thing that I just got so overwhelmed because I looked at it and said, man, this is a monstrous elephant. I need to go ahead and just open my mouth as wide as possible and eat this entire thing. But really what I came to realize is that I was putting undue stress on myself without realizing that it's all about one step at a time and laying one brick at a time. And that's why I love this process now, because I can look back, over the past 6 months, over the past year, several years, and just see how the little actions stack up. And so, that was sort of my first thing. It was like, I just started to get so overwhelmed and so stressed because I felt like I was pushing this boulder up a mountain and it would crush me. It would fall on me. And I would make these mistakes. And I was also trying to survive financially and whatever it may be. And so I guess, the biggest thing that I would say looking back is that, all right, if you want to make this transition, you need to realize that it's all about just taking one little bite at a time, one little step. And what is it that you can do to create some more momentum? Because momentum, what I've recognized, is one of the most powerful forces, not only in physics, but in life and in business. And so for me, taking one step then led to 2, to 3, and then it started to get exponential. And so, I tried to look back and say, well, what were the steps that were most important? And if I were to prioritize, it's really about building the relationships, learning from others, what mistakes can I avoid, by investing in a relationship. Because I don't know about you, when I got started, I was not humble enough to realize that I really needed to ask questions. And I wasn't humble enough to realize that it's okay that I didn't have every answer. I just wanted people to think that I was a respectable real estate investor from the very beginning. And you know what? That cost me a lot of money. It cost me a lot of money. And so now I'm more experienced, but the more I know, the more I realize I don't know. And so I'm willing to ask questions. I'm willing to surround myself with people like you who are smarter than me. And so I don't know. I think that's the biggest thing. So you have to prioritize, but then also say, all right, what one step can I take today? What can I do that's right in front of me now, rather than look at this huge mountain and say, man, how am I going to climb that?
No, it's great advice there. I think that's really strong for anyone listening right now. Is just really focus on that first step. Focus on the day-to-day task. What is the one thing you can do? What are the steps you can take? And really build it kind of methodically, as opposed to trying to take on so much that, it becomes really stressful and chaotic for you. So with that said, you have started investing, you start building your portfolio, you kind of transition from being the broker to an investor. Where are you based? Where do you start focusing your investments? All local, or do you kind of look around the country, or what's your approach to start as an investor?
Yeah, so I'm based in Louisville, Kentucky, and I invest actively here. I've been investing since 2016 as an active investor, and it's all been focused on multifamily real estate because that's what I believe in most. And it's also what I had the most experience in as a commercial real estate broker. So I knew how the transactions happened. I knew where the deals were coming from. I knew really all about the inventory, and I knew all about the market forces there. And so I still believe deeply in multifamily. So I've continued to expand that. I've also been a passive investor in other states throughout Kentucky as well as Georgia. And so I'm, very fond of each of those markets. But as we expand, and, we've actually kind of pivoted into syndications as of recently. We've been building our team over the past 8 months or so, myself and my partner, Brian Flaherty. And, we've really been kind of looking to expand across Kentucky as well as the Southeast, because we believe in sort of the migration forces that are at play. But also, 3.5 weeks ago, it was an extremely competitive market and environment. And now obviously the hat has been falling with coronavirus and COVID-19 and that whole situation. So we're assessing the environment to say, well, how can we best interact in this and best compete? Because prior to this, it was a very much a seller's market and extremely competitive from the buy side. So, we've looked at hundreds and hundreds of deals for, CF Capital, and we've passed on most. And we've certainly made proposals on many. And to be honest with you, over the past 8 months has not been a great time, but it'll be interesting to see how this shifts now that we have a new market cycle that we're entering into. So I don't know if that answers your question, but happy to dive into any of that.
Yeah, no, absolutely. I think, Louisville, Kentucky, I want to talk a little bit more about the market, right? But I get completely why you're focused on multifamily. It's the same reasons we focus on multifamily, and it's your backyard. It's the neighborhood you understand, and you can expand from there. Give me a little bit more context to why Louisville is such a good market when it comes to multifamily investing.
Yeah, one of the things we really like about Louisville in particular is that it's not a boom or bust market, especially in this past market cycle that we've just kind of seemingly gone through. A lot of the primary markets, a lot of your gateway markets are more of your boom or bust. You're going to see a lot more appreciation. You're going to see a lot more rent growth, perhaps even population growth. And, Louisville's been kind of a slow and steady sort of grow market. And if you look at, population as one example, it's been a slow and steady 1% growth over the past decade. And same thing when it goes to rent growth. It's been about, just shy of 2%. And so is that something that's going to jump off the page? Absolutely not. But it's also something that we see as like, all right, well, in times like this, when we have a shift, it's not like we had some massive appreciation that we're now evaporating, and, you're starting to see a major shift in cap rates and so on and so forth. So we see it as as a market that's safe in many ways. It's more conservative. And at the same time, we've had a lot of compression in terms of cap rates, in terms of appreciation, but in terms of comparison, And when it comes to syndicating deals, our investors like the opportunity of sort of diversifying away perhaps from some of the primary markets and adding an element of risk mitigation in terms of a different type of market there. And so, the population of Louisville as an MSA is I think it's about 1.4 million. So it's not a small city. It's not a huge city at the same time. It's got a diversive, job, climate, diversive economy, where you've got UPS Worldport is headquartered in Louisville. So you've got a huge logistics hub there, as well as manufacturing. There's a huge amount of growth along I-65, which comes down from Chicago, as you know, through Indianapolis, through Louisville, which connects to Nashville, as well as Birmingham, Alabama, and south there. So you've got a lot of distribution. It's also within, a day's drive of 70% of America. So you have a ton of distribution and logistics, which, as we know, is a very important driver in the current economy and the current marketplace, as well as what we believe will be, very important for the future marketplace. And so, we see a lot of those sort of forces that are very important. And also healthcare is a big employer here. Humana is, actually headquartered here, as well as several others. But you also have major, headquarters from, Papa John's. You've got Yum Brands, which is one of the biggest restaurant employers in the world. You've got Taco Bell, Kentucky Fried Chicken, KFC, and several others that are under that kind of umbrella, which is a global company, which is headquartered in Louisville. And so, I could go on and on about the various different organizations and corporations, but it is, there's a ton of blue collar sort of workforce type of employment opportunities. So from a multifamily perspective, those are drivers that are very important for us. And, the deals that we look at are typically your B and C class deals. And so the drivers of those sort of, slow and steady sort of opportunities are very important. Another great example of an employer here is Ford. There's a huge Ford truck plant, which really, manufactures all of the, Ford trucks for across the globe. And so, they've been investing billions and billions of dollars over the past several years and expanding that. And so, we see those as steady workforce sort of, opportunities for people to, create a better life for their family and create a living for themselves and their family. And so, those are a lot of the driving forces. But in terms of the geography, that's really one of the biggest drivers. Also, it's pretty interesting because it sits on the Ohio River, which is just across from Indiana, which now they've created a completion of a bridges project in the Louisville area, which has really kind of made that market overall much more cohesive. And you've actually seen a ton of new, actually industrial spec development in southern Indiana, as well as along that I-65 corridor, which is creating a tremendous amount of job growth. So you really see actually one of the biggest things that's actually very important to this market and to this region is the development of industrial real estate. It's actually number 9 industrial real estate markets in the United States. So you got a top 10 driver there. And so you see a ton of spec development on industrial real estate. So most people will say, hey, well, why aren't you investing there? Perhaps in the future. That's not my specialization currently, but that's a huge driver in this market.
Awesome, man. Great information there. To recap a little bit of that, one of the things you love is that it's a stable market. So it's not boom or bust like some of the coastal cities, but very stable, seeing kind of 1% population growth on average, seeing kind of just under 2%, rental growth on average. And you have major employers located there from the Yum Brands, Humana. Ford has a pretty big plant there. So you have a lot of jobs, a lot of great blue collar jobs that'll help to fill these B and C class apartments. So just really focusing on kind of the growth and stability and the physical location, right? Just being close to the middle of the country where you can get to 70% of the country within a day. All great reasons to invest in a city like Louisville. And a lot of these things are very similar to the reasons we like the Midwest, because the factors you said, right? The stability, good cash flow, solid returns, and it's not boom or bust. So honestly, when we go into whether it be recessions or different, upticks or downticks in the market, we're a little less concerned there because the fundamentals are strong and we're investing in places that are going to be strong because it's not a bunch of speculation. It's not a whole bunch of developers running there to, put up new Class A apartments because they think they can make, a couple quick $1 million. It's really about the stability of the market. And you gave that, by the way, just like a broker. I mean, just like a broker, you went deep into the market and analyzed it and got everyone excited. So I'm really happy to hear you talk about that. Speaking about being a broker and that broker background, how has that helped you coming from the broker side of it to being the investor?
I think it's helped me tremendously, just from an understanding of who the players are in the marketplace, because at the end of the day, it's all about relationships. I mean, to get deals done, to find opportunities and to get them across the finish line, it's all about what relationships you have. And so my background as being a broker, has really given me the understanding of, what levers do I need to pull in the marketplace? Who do I need to be talking to get something across the finish line? Or, and the other thing too, in terms of, one of my most favorite quotes and one of my most favorite concepts is all about repetition. Repetition is the mother of all skill. And I think one of the most valuable skills that you can have in real estate is being an effective negotiator. And, being a broker and having a background as a broker has given me a ton of repetition in terms of negotiating deals. And so, now every time I'm negotiating on behalf of my partners, it's not practice. I'm not learning on the job. And obviously there's always something new to learn, but I've got a ton of experience in that capacity. And so I would say that those are probably the two most important and most vital, reasons why being a broker has set me up for success as an investor. It just comes down to relationships, knowing who needs to be involved and knowing who can sort of allow me to, use a little bit additional leverage in addition to negotiation, repetition, and skill, and continuing to stack both of those on top of each other.
So you went from the broker side to being an investor. And, I know most of the time, for an investor doing their first deal, when you don't have the experience or the credibility, it can be hard being taken seriously by the brokers and to get deals done. Obviously, coming from the broker, you probably had some leeway there. But for people who don't necessarily have a track record of that experience or the credibility, now that you've been on both sides of that equation, what are some tips that investors can employ to get taken more seriously when working with a broker if they haven't done a deal yet?
Yeah, no, it's a great question. And credibility is extremely important. That was one thing that, one of the reasons why I went out and obtained my CCIM designation as I was building my business was because, I was a young guy and most people in this space are like, come on, man, I've been around for 30, 40 years. It's like, who are you? You don't know what you're talking about. And so I just want to highlight how important credibility is. And so I think one of the things that you can do in addition to obtaining sort of designations, perhaps maybe that's not your thing, is surrounding yourself with other people who have credibility and more experience than you do. If you need to go and partner with, maybe you need a key principal who can pull some weight beyond just their balance sheet. You can say, hey, me and my partners have acquired this much in real estate. And these are the recent deals that we've done. If they truly are your partners. Now you've got to tell the truth. You've got to be honest. But I think that's one of the most important things is to surround yourself with people, who have more experience than you do and give up some of the pie. I mean, you got to get there. That's an investment in itself, investment in patience. So I think it's important to surround yourself with people who can give you additional layers of credibility. But then also it's about learning and it's about growing. It's about having conversations with other people and showing them that you have a clear line of thinking and that you understand what you're doing and that you have the capacity of bringing this deal full circle. Because at the end of the day, when it comes to credibility, people are looking for somebody who's credible enough to get the deal done. They're looking for credibility because they want certainty that they're not wasting their time with you. So I think those are a few of the tips that I would share on credibility.
Excellent tips. I mean, we talk about networking all the time, and I think that just underscores the value of building a strong, solid network. So you can look at the objections and take an honest look at yourself. What are the challenges? Where are the weak spots? And how do you strengthen them? You can't make up experience. You can't just run out there and pretend to have experience you don't have. But you can overcome many of these obstacles if you ask yourself, how can I? And in this case, one thing you can do is align yourself with people who are more credible, who do have that experience, and be willing to give up some of the deal in order to make that happen. So really excellent tips there, Tyler. Tyler, let's fast forward. I want to talk about the portfolio and kind of what you're doing from a brand standpoint right now. So talk a little bit about the portfolio that you've built out. You've mentioned kind of BNC properties, but give me a little bit more context to your investing strategy and philosophy.
Yeah. So thus far, it's funny because as I got started, I just wanted to get into it because I read Rich Dad, Poor Dad, and I'm like, man, this makes perfect sense. I got to get a deal. And so I knew most about multifamily. And the first deal I did was a small multifamily deal. And I made every single mistake in the book. I mean, I fell flat on my face so many different times. I didn't have a team in place. I didn't have systems. I didn't know what I was doing. I didn't have contractors. I mean, so I stumbled into this business, because it looks so much easier as a broker. And let me tell you, it's easier to be a broker than it is to be a successful real estate investor, in my opinion. And I'm going to go ahead and apologize to all the broker listeners out there. But
listen, don't apologize. It's true, because the bottom line is it's easy to be an investor until it's time to operate. And a broker, you can come up with everything you want, but you don't have to deal with the city officials. I mean, right before we hit record, I told you, I was dealing with, inspections in the city and things like that. And you don't have to deal with that on a broker. Deal didn't really pencil out the way we projected. Oh, well, hey, I mean, there's no consequences for for being off on the broker side of it. And that's no offense to brokers. I'm just simply stating that, the broker's job is to get the deal closed. The investor's job is to own, manage, and execute for 3, 5, 7, 10, how many ever years. So, there's a lot more things that you have to factor in being an investor and an owner versus simply being the broker.
Yeah. And don't get me wrong. I mean, there's certainly challenges when it comes to building a brokerage business. And, when you got so many different personalities in the mix, I mean, there's a ton of things that you have to manage. But at the end of the day, the deal is closed. You walk away, you wash your hands, and you want to continue to build that relationship with somebody. But, at the end of the day, the longer term sort of requirements in terms of asset management, in terms of strategy, systems, and just course correction as an investor is more challenging. And, it certainly gets easier as you go. But in terms of your question, my portfolio locally, I've built up, several different sort of multifamily properties, some of which I've exited, some of which I hold long term. And then also I've built, I'm invested in 2 different passive, opportunities, syndications, elsewhere. And so that's really my portfolio. And as far as what, CF Capital is doing, we are acquiring, 100 to 250 unit, multifamily assets across Kentucky. And we're also evaluating several different markets throughout the Southeast right now to kind of take our look at what the next sort of market is. And the reason being is because, deal flow, especially right now, I mean, deal flow is totally quiet. I mean, during the whole coronavirus situation, but it was already a challenge prior to this, in the markets across Kentucky that we've been looking at. So, we're primarily involved in, the larger metropolitan areas of Kentucky, which are few, Louisville, Lexington, Bowling Green, Northern Kentucky, so on and so forth, and surrounding submarkets. We also do look at, Southern Indiana. So, that's where we're expanding to, but, the future is bright. I think there's a ton of opportunities. There will be a ton of opportunities on the back end of this, that didn't exist before. So we're busy building our systems and, managing the current assets that we have now and, continuing to grow.
I love that, man. It sounds really good. And one thing jumped out to me, I don't know if our listeners caught it, but we've talked a little about you being active and building your portfolio, looking for 150 to 250 units, as well as being a passive investor on 2 deals. As someone who has the active experience, has a CCIM, has been on the broker side, what was your goal in investing passively on the 2 deals that you were in?
My goal was to learn, number one, because I knew that I could earn more as an active participant. I knew that there's more upside. No, I still know that there's more upside as an active participant. There's also more downside at the same time. But it's a leverage of my time. It's a leverage of my resources. But mainly it was to learn because I knew I wanted to be a syndicator. I knew I wanted to leverage my own expertise and my network and do bigger things because, as I built up my active portfolio, it's like I was earning capital and then I would go put it all into a deal. And then I would do the same thing. I would go earn capital as a broker and I would put it into the next deal. And that gets exhausting, to be honest with you. I mean, it's a lot of work to do that because then you're working the deals and you're doing all these things. And you also have a limit, or at least I did, on the size of deal that I could get, which also then limits the type of team that you can put in place. And so I knew that the steps that I wanted to take were to leverage this in terms of, raising capital and putting bigger deals together. So I wanted to learn it not only from an intellectual standpoint, but from an experiential standpoint as well. And the folks that I've invested with passively, are friends of mine, are people that I know, trust, and respect that are doing great things. And I said, hey, if I invest with you, I want to give you my capital. I'm not going to breathe down your neck, but can you help me figure this out along the same way? And they've been gracious enough to do that. And so that was sort of the thought process because number one, I totally believe in the investment. I want to make sure that I know how I feel as a passive investor in their deals. And I want to make sure that I'm treating, folks that are investing in our deals the exact same way. And so I felt like it would give me a better experience and rather than, just having an intellectual book knowledge of, if you invest, you've got to treat people well. But also at the same time, it's like when my money goes into something, like I want to know. And if I don't know, how does that feel? How does that feel to not get a distribution for 3 months? Or how does it feel to not have an understanding of what's going on during the, biggest market crash in the past, 100 years, whatever it may be, So I don't know. Those were just a few things. I just wanted more experience and I wanted to get that perspective in addition to all the benefits that we love, mostly about real estate.
No, I think it's excellent that we talked about kind of credibility and experience, and it's just another way to gain that experience and credibility. So as you said, you knew you wanted to get into syndication and being an active syndicator yourself. Being a passive investor is a phenomenal way to gain that experience. And it's not just borrowing it, right? Which in some cases you're partnering with someone else to borrow their experience. But in this case, you're actually going through it. And you mentioned specifically wanting to know what it felt like to not get a distribution one quarter, or, how are they communicating when things are rough and things are outside of their control, really just understanding the nature of what it's like to be a passive investor. So as you do lead, or when you get to the point where you're leading your teams, you have real world experience of what it's like being on the other side, and you can manage those relationships even better. So I'd say again, for anyone who does want to work with investors, one of the best ways, and honestly, I think almost everyone, maybe your situation is a little different, but if you can, you should really be a passive investor first. Understand what it's like being a passive investor. And it's one thing to understand empathetically what it's like. It's another thing to actually be on the other side from a technical standpoint to understand the amount of communication, what questions do you actually have, and just to kind of track that experience so you can know the type of operator you want to be and the type of communication you want to focus on. Tyler, what has been kind of one, I'll say surprise, or one key learning, or one thing that maybe you decided, hey, I'm going to do this differently from being a passive investor? What's one thing you've recognized that you want to do a little differently there?
That's a great question too. I think one thing that I've noticed is that, I would rather be more frequently distributed to. I mean, as interesting as it is, I'm getting distributions on a quarterly basis. And I know that it's more work. I know that, there's much more involved in terms of making that happen. But, I think I would be more inclined and more reminded of how much I'm enjoying being a part of this deal if I was, send a distribution on a monthly basis. Just because of that repetition, we go back to that repetition. It's like, man, there's a dopamine hit when you receive a distribution, even if it's, it's nothing substantial. So I think that's one learning that I've had. It's just kind of basic, but one of the things that I'm really fond of is just over communication. It's like, even if there's nothing to say, we're still going to update you anyway. So that's one thing that I've learned in a good way, that, these operators that I've partnered with do over communicate. It's like almost know too much. It's like, all right, I don't have time to, go through all these details this time, but I really appreciate you keeping me updated. So those are just a kind of, a couple minor takeaways that I've had.
No, that's awesome. Tyler, let's talk about Elevate. You launched this podcast. It's a top 200 platform. One, congratulations on the success you've had with the podcast. What sparked you to start the show, and how have you been able to gain value out of hosting this podcast?
Yeah, so I love doing the show just because honestly I get to meet people like yourself and get to know people like yourself so much more. But the concept behind the show is, it's combining personal growth with real estate investment. And my philosophy is if you can combine those two forces and continue to chip away at them and lay your bricks on a daily basis, that you can elevate to a life without limits. And I believe that, real estate gives you the practicality, through cash flow, through wealth creation, through all the other benefits that you and I loved and came to learn after we went through our corporate stints, that if you can combine that along with growing your own skills, your own, having an understanding of your mindset, your habits, your routines, your systems that you build personally and professionally, to then combine that with real estate investing, you can do anything you want in your life. You can travel the world. You can give back. You can create a foundation. You can be creative. You can go have fun. You can just live a life that neither you or I even knew was possible. I know I didn't know that. I didn't know that any of this was possible. I thought that I would had to go to school, get good grades, get a good job, and, live my life after I'm 65. And so, I'm thankful that I had a little bit of a contrarian sort of viewpoint going into this and sort of, as I kind of built my career early on, but I still continue to learn every single day. And as I grow as a person, my opportunities open up more so, professionally and from a real estate perspective. And so I just want to give that to more people. In my opinion, I think that, millions of people, not only in America, but around the world, live a life that they tolerate. And I believe that if you can live a life where really, anything is possible, you can actually step into fulfillment. And it's not just about money. I mean, real estate, certainly can create substantial wealth financially, but it's about really creating fulfillment and creating, a life that you're proud of, where you can look back and say, man, I didn't just plug it in because I had to. I plugged it in because I got to, and I got to do anything I wanted. And I created something where others were inspired by my sort of example that I set. So that's really the whole purpose behind Elevate.
Man, I love that. You said something that was really profound. Don't just live a life that you tolerate, just really create something, create the life that you want. We talk about life by design or lifestyle by design, and you can have these things. We sometimes don't give ourselves enough credit, but it really goes back to where we started the conversation about, really taking one step at a time, kind of brick by brick, building the lifestyle. No, you probably won't wake up tomorrow with a jet in your driveway. Probably not realistic if you haven't been, already down that pathway. But if that's a goal of yours, or traveling around the world, half of the year, then start laying the framework for what that looks like and what it will take to get there. And don't just tolerate your current situation. You can definitely create the situation that you want. You may face some challenges in the road, but be willing to overcome those things and continue to ask yourself, how can I overcome this challenge? How can I make this thing happen? And how can we have success? Tyler, recently I actually was on your show and really enjoyed our conversation. And you used a word that was beyond my vocabulary. And I have a pretty good vocabulary. I'm a C+ English student, but I still have a pretty good vocabulary. What was the word? What?
Equanimity.
Equanimity. All right.
Yes.
So please enlighten our listeners about your philosophy around equanimity.
Yeah. So first of all, your listeners are probably like, what is going on right now?
My listeners are very intelligent. They're probably saying, John, how the hell did you not know what that meant?
That's true. That is true. They're like, dude, you got Google or what? So no, what I've learned about, so like, this is what we go back to, the personal growth combining with real estate investment, because in the beginning, I was so stressed out all the time. I'm like, man, how am I going to do this? How am I going to, I don't have the right relationships, and I didn't know what I didn't know. So I just got so stressed out. So I started to get interested in meditation, mindfulness, and understanding more of my emotions. And so as I did that, my curiosity led me down these different paths where I would read books, and, I actually took meditation courses, and my teacher taught me about a concept called equanimity, which basically means, rather than, living in the extremes of emotion, whether it's like, all right, the market just crashed. If you're invested in the stock market and you're not living in equanimity, you're probably like panicking, you're living in fear, your heart is racing, you're freaking out, you're going crazy. Or, maybe it was a month or two ago and you're a stock market investor and you're like, man, this is all time high. Dow is over 30,000. Look at me. I'm the winner. I know how to do everything, pounding your chest and you're celebrating. That's the other end of the spectrum. And so, equanimity is all about, all right, as an investor, it's such a valuable concept because when times are good, you don't have to live in this, extreme celebration state and you're over the top and you're just so proud of yourself. You can really actually kind of live in the middle and say, you know what, things are good. However, I've got to have some humility to recognize that things may not always be good. And when they're not so good, I don't have to go down in the dumps. And so that's how I try to live my life. And I don't know about you, but in real estate, man, it is a freaking roller coaster without coronavirus, without, whatever market crashes that can happen. So it's been a really useful concept for me because I don't know about you, but like when I lose a deal, as an example, my initial reaction is like, man, I'm a failure. I can't believe that I screwed up on this, and this, and it's my fault. And man, my partners are going to be pissed at me. Or I could just say, you know what, these things happen. And what did I learn from this? It's like the question that you continue to repeat is like, how can I do this? Or what is there to learn here? And so I can stay in the middle instead of just being so volatile, I'll say, in terms of my emotions. I can act more appropriately and I can learn more and I can glean more wisdom from everything that life has to teach us, whether it's, celebrations in the good times or, failures in the bad times. So that's what equanimity is to me. Ooh. And so I'd love to hear, what does it mean for you now? And is this something that you're applying to your life, John?
Oh, I love it, man. So it's funny because I wrote that word down after we did our episode, and I couldn't tell if you were just trying to flex your vocab skills or if it was a word you use naturally in your day to day. But the meaning and definition stood out. And I'll tell you this too. What I thought was really interesting was the fact that it stuck with me, right? I probably had 3 other interviews that day, and I kept thinking about that word. So it's also one of those things that's sticky, right? And for our listeners, both of us are marketers, so I think we'll use this as a marketing trick. But sometimes, and I have to remind myself of this, but sometimes you want to have something that sticks, something, a phrase or a message or something that has a hook that people will remember, that when, after the 50-minute episode or whatever they've done all day, there's something that sticks. And I think equanimity, did I get it right again?
Yes.
Equanimity is one of those things that has that power. So for me, the way I interpret it from my life, and I broke my foot back in November, and I think this is a perfect example. It is really about staying even keel and asking yourself the pertinent questions that allow you to grow. And in that instance, the question I ask myself is, what lesson am I supposed to learn from this? And by asking that of pretty much anything that happens, so you don't get the deal, what lesson am I supposed to learn from this? Hey, stick true to your guns with your underwriting. It's, whatever it is, right? In that situation for me, it was humble yourself and ask for help when you need it. Don't be so proud to ask for help. And I don't want to get too deep into the story, but the short version of how I broke my foot is I ended up jumping off of my roof. Now, at around 3 different instances, I could have asked for help, but at each interval, it kind of got more either embarrassing or it just didn't feel like I wanted to put myself out there to ask for help. Nonetheless, I break my foot jumping off a roof, and I got to tell the story to everybody as I'm hopping around or, my crutches or my wheels. So it's like, it would have been way less embarrassing to tell one person how I got stuck on the roof in the first place than have to explain to hundreds of people how I got stuck on the roof, right? So just really getting your ego out of the way and doing the thing that makes the most sense, that is the easiest answer. I know you're a coach. We kind of launched our coaching program as well. And I know a lot of people want to figure it out themselves. And I will tell you, this is one of those times where you can absolutely try it yourself. But if you can find someone that you gel with who can help make that learning curve easier for you, it's a good time to ask for help. So these are the kind of things where we talk about just what am I supposed to learn from this situation, apply it and move on. But I think equanimity is something that is really strong and powerful. It's a great concept. If you haven't heard of it, definitely Google it and read more about it. I'm sure there's some videos and things like that on the subject. So definitely check that out and learn more.
Yeah. I mean, here's the thing. It's not about what happens to you in your life or in your business. It's about how you respond. And so it is all about training yourself to recognize that good times and bad times, or good circumstances or bad circumstances that you perceive to be good or bad, will happen. And it's just a matter of how do you act in that. And if this is a long-term game, which we all believe life and real estate investing and business building is, it's a matter of how are you training that inner voice and how are you responding to these circumstances. So I think it's really important to always be spending time on how are you training yourself. And that's really what this concept is all about.
How has a failure or an apparent failure set you up for later success?
Well, like I said, the first deal I ever did was it was a total failure in the beginning. Thankfully, I fumbled my way into creating it as a success, because then I was able to build my team. After I failed on putting a bad team member in place, as a property manager, I put another bad team member in place as another bad property manager. And I finally found a great one. And then I built a larger portfolio with that individual. So that's just one example. But, I think looking back, it was a great experience to fumble in, because now I asked the right questions. It's like, all right, worst case scenario happens. It's possible. What do I do?
What book have you gifted or recommended the most in the last year?
Think and Grow Rich. It's always one that's been a life changer for me. I'm sure many of your listeners say that, but I still read it every year, and I recommended it yesterday to somebody, and they're like, their mind is kind of already starting to be blown. So it's a great book.
Give me a digital or mobile resource you recommend for your business.
This is a good one. Right now, Zoom, right? Zoom is super important. I mean, we have a monthly meetup that we do here, which I'm sure you do as well. And we transitioned that to Zoom this past week and had a ton of people show up. And obviously we're connecting right now via Zoom. And there's been so many different ways for us to still have face-to-face contact. And so how do we come out of the other side of this challenge that we're experiencing right now? I think Zoom is a great tool.
Give me a daily habit that helps you stay focused on your goals.
For me, it's reading. I spend an hour every morning reading. And sometimes it's not just the information that I gather from reading books, but it's what it causes my mind to think about and sort of strategies that I glean from reading. So that's just a very important habit for me that I continue to be obsessed with.
What's one thing you know now that you wish you knew when you were starting out?
I wish I knew that no one cares about my ego, because when I got started, I thought that if I asked a question, somebody would recognize that I was a beginner. And now I know that more questions that you ask, actually, the more respect that you gain from other people, because you show your humility and that you're willing to still learn. So I wish I would have known that lesson early on.
What are you curious about right now?
I'm really curious about this economy. I'm very, very curious about where this is all going to shake out. I don't think anybody has a clue. The dust is still way up in the air right now. And I'm very curious about where this will settle and where the opportunities are going to be on the back end of this.
All right, give me the best place to grab a bite in Louisville.
Ooh, this is a good one. It's kind of a foodie town. I will say that. Man, it's going to be a hard one to answer this. I would probably say, honestly, if you're looking for like a nice dinner, Porcini's is a great Italian restaurant, or Jack Fry's is probably number one. It's a great steak restaurant.
All right, two really good options there. All right, Tyler, for our listeners who want to get in touch and check out the Elevate podcast, what's the best way to reach out and find that platform?
Yeah, elevatepod.com, or of course on any platform, whether it's Apple, whether it's Spotify, YouTube, you name it, we're everywhere. So just search Elevate with Tyler Chesser, and your show is coming out soon. So everybody needs to look out for John on Elevate podcast.
Thank you. Appreciate it. Tyler, love talking to you, man. Great information. Really enjoy listening to your story and your journey from kind of the corporate side of international marketing to being a broker to being an investor yourself, and then finally moving on to the syndication space and launching your podcast, Elevate, and having so much success with that platform there. Really appreciate kind of all the tips and guidance you shared about kind of your mindset and just allowing us to take from what you've been able to build for yourself and be able to implement some of those things into our own lives to make sure that we are thinking about these situations and opportunities the right way with an even keel that allows us to grow. Tyler, you're a good friend of the show. We look forward to staying in touch and talking to you again soon.
Thank you, John. I really appreciate it.